Okay. So good morning. Thank you, everybody. I'm very excited, as always, to present to you the industrial sector report. We had a very, very busy and vibrant year in this sector. I have a lot to go over in a short amount of time, so I will dive right in. Here's a brief outline as to what we're going to talk about today. I'll start by looking back at 2015, tell you about some deals, tell you about some anecdotes and some trends that we're seeing. Current conditions, I'll present the report or the results of the industrial market survey, and I will then get into my forecast. So 2015 was, I would argue, the busiest, most vibrant year in the industrial sector that I've certainly seen in my career, and I've spoken to some senior brokers and they echoed the same thing. I've stood on this stage for 5 years now, and I've been talking about this continued decreasing vacancy rates and this stunning lack of inventory. And if there's any takeaway to my presentation today, it's this: we are full, and we need more inventory. Why is that? I think obviously the most clear reason is that we haven't added supply. We haven't had a lot of construction in this sector, and that is certainly impactful. But what else is going on? I wanted to dig in a little bit and see some other trends. One of the more interesting things that I've been noticing is increased competition for industrial-style space from non-industrial users. Most obvious are things like breweries, coffee roasters. Medical marijuana continues to crop up, pun intended, CrossFits, gyms, things like that. Any user that needs large open space but also values visibility and retail accessibility, that's who we're competing against with now. Paris Farmers Union is another good example. They bought a building on Warren Avenue. These uses are really transforming industrial stretches, and it's putting a lot of pressure on some of the more conventional warehouse users. Best example that I experienced was in Bayside. I represented a company shown here, American Roots, small textile company, simple manufacturer, very good business. We looked at a lot of different properties, including Bayside, and saw that asking rates were 10, 11, 12 triple net, which was very eye-opening. It made me realize that we were competing against some of these other uses that are willing and able to pay those types of prices, and that it wasn't the right location for my client. We ended up leasing space elsewhere off the peninsula for about half the price. I mentioned breweries continue to be a major sector driver. There were not as many new breweries in 2015, but the ones that did open in years past all seemed to thrive. These three shown here, Bissell Brothers, Rising Tide, and Foundation Brewing, each made significant real estate upgrades and improvements this past year. And people ask, how are all these craft breweries surviving? They're not competing against one another. They're competing against Bud Light and Miller Lite. They're actually very cooperative, and they work together quite well. Medical marijuana, as I said, it continues to impact things. The tenants and the folks that are running these businesses are becoming more business savvy. They're becoming more commercially viable, certainly more real estate competent, which is a good thing from brokers and landlords' perspective. And in some cases, landlords are now recruiting this use. One consistent trend that I've seen in many, many years is that small to medium-sized deals still drive this market. We're still, the bulk of the hundreds of deals that we all did collectively, a bulk of them are still in this 5,000 to 10,000 foot range. I referenced some here. Pro AV doubled in size, moving from Portland to Westbrook to 6,500 feet. Smart Carts doubled in size in Gorham, 5,000 to 10,000 feet. EMC is a small company out of South Portland. They purchased an industrial condo in Portland. And these are just indicative of kind of the deals that we're doing. Maine-based companies, relatively small, all growing very healthily and organically in this market. Now, there is a downside, and the overriding challenge to this healthy market, if you want to call it that, is that limited inventory is really inhibiting growth and expansion for a lot of companies. I mentioned American Roots. Here's a few other examples. Safelite Auto Glass was in the market for many months last year, looking for existing inventory with no success. They ultimately started looking for build-to-suit options, and just last week they signed a long-term lease on Warren Avenue, but it was a build-to-suit for considerably more rent than they would have had they found an existing facility. Pods and Commercial Delivery Systems both tried to relocate into Portland with no success. Pods is in Biddeford, CDS is up in Augusta. They have a small Portland operation, but they wanted to expand. There just wasn't any room. Now, another very impactful and interesting trend that we saw in 2015 is this concept of speculative buying as opposed to building. Now, that is where an investor or developer purchases an empty building with the expectation and hope to rent it out. Obviously, it's a risky play. You're buying an empty building. I had planned to go into each one of these in detail. I'm very cognizant of the time, so let me just say in general, these all sold empty for market rates. These were not discount sales to obviously very aggressive buyers, and they were bullish on the market. They were willing to take a risk. They saw that low vacancies and where lease rates were, and they could make them work. Each were successful. They've all been fully leased with the exception. I should say that 413 Warren, that was the spec building. 235 Presumpscott Street is about a third under contract, and so these are really turning into really good cash flowing investment opportunities for the buyers, but they had to take some considerable risk. Land. Land is clearly the next step. We had a lot of increased activity in 2015. In Saco, we sold a lot in the Millbrook Park to Maine Molecular Quality Controls, represented by Roxanne Cole. HSC Gould, they're a client of mine. Again, we were in the market many months last year looking for existing inventory with no success, and ultimately we put a 3-acre parcel of land that was off market under contract in South Portland. Digital Drive, we sold 2 lots in Biddeford to a company called Sea Rose Traps. They're going to build a lobster trap manufacturing facility there. And there remain several build-to-suit options where industrial land owners are happy to build for prospective tenants. As in all sectors, as you're going to hear all day today, I think investment properties are the highest demand. These are cash-flowing investment deals. Again, I'd love to tell you detail about each one, but let me just say each of these sold for between 7% and 9% cap rates. Cap rates are falling. Local buyers are now competing with out-of-state buyers and international buyers in some cases. And in order to win deals, the message is that you have to be willing to take more risk, shorter lease terms, expand the geographic searches, and in some cases, lower building quality. Cash flow is king, and that's really what's driving these decisions at the end of the day, and pricing. So, all of this activity and positive news, it sounds great. Here's the question, and I get it often. Have we recovered from the recession? And I think it's clear that in the greater Portland industrial market, the answer is yes. I'll just give you some anecdotes here. We've had several off-market deals, as I mentioned. Many of our listings received multiple offers very quickly. The data that I'm about to present to you suggests a full recovery. Class A facilities are selling for the highest per square foot numbers that we've ever seen. I just got a call last week from Greg Perry. He sold a building for $80 a foot. It was an investment deal, but $80 a foot is extremely high and probably the highest I've heard in my career. I will spend a little time talking about these. These are owner-user deals. To me, always a little more indicative of true market health and overall value. These are deals that were caused by a business's need to occupy a building and occupy real estate. So 7 Alewife Road, Park Road in Kennebunk sold to Kennebunk Savings Bank, $3.5 million in a deal brokered by Dan Greenstein and Drew Sigfridson. Great for Kennebunk Savings. They're going to be converting this all to office. Kind of bad news for the industrial market. We're losing that inventory from our already tight rolls. 250 Canco Road. This is one of 2 Pepsi bottling facilities my company sold in Maine last year. This one sold to the city of Portland for $2.7 million. They're going to be relocating the city's Park and Public Works Department. $2.7 million brokered by Tom Dunham. 60 Industrial Park Road, this was the former Meridian Life Science building, kind of an office, lab, warehouse property, sold to John Murphy Homes. They're going to convert it to a school for special needs children. Great use, good for them, it's a good location, bad for the industrial market. We're losing more square footage there. Greg Hastings and I brokered that deal. 600 County Road, I mentioned fast deals, aggressive deals. This property in transaction probably embodied that more than any. Titan Machine moved out of this building, and the owners were concerned about the asset. We listed it, and we immediately got a lot of activity, multiple offers, and it sold rather quickly to Sigco. Sigco's right around the corner. They had hopes and plans to perhaps expand their building, which they may still do, but they saw this opportunity and jumped on it quickly and aggressively. The Lincoln Mill, this is an interesting and rather indicative of what's going on in Biddeford. I saw Dan Stevenson here earlier today. There's a lot of this conversion of old, antiquated, light industrial space to more conventional uses, office and retail and residential, and in this case, hospitality. Ty Hobbs at Bolus sold this building for $2.5 million last year. And this is a kind of an interesting one. Not that it's the biggest deal of the year, but it's a rather simple warehouse on Riverside Industrial Parkway, but it sold twice. And this is an example of several buildings that actually sold twice in 2015. And again, talk about a sign of a hot market. The original buyer bought it as an investment. He was an abutter. He was just going to try to rent it out. And at the same time, or actually shortly thereafter, Brad Moll in my office was working with a owner-occupant, really insistent on owning something, an electrical contractor, I understand, and he was willing and able to spend a little more, $80,000 more than what the original buyer had, and was happy to do so. He was able to pick up that asset, put his business in there, and start to build some equity. Leasing remains extremely important in our market. 80 Anthony Avenue, this is another example of a speculative buy. We sold this to an investor in Augusta, empty. Before the ink was dry on the closing documents, we had Harvey Industry taking 33,000 square feet. Skip continues to expand their kind of main foothold and presence. They leased 30,000 square feet in Rummery Park. 90 Spencer Drives in Wells, two significant renewals there. Village Candle and Wasco both renewed last year. And good to keep that facility full. Again, it's just a very large building. Tony McDonald and Greg Hastings handled that. SIVA, this is a third-party logistic company. They work, their client is this company FMC, who specializes in seaweed production. They needed distribution space. They looked all over the state. My understanding is they wanted to be as close to Rockland as possible. Very limited options. So they ended up in Auburn, high ceilings, good loading docks. Craig Young represented the tenant, which was SIVA, technically, on behalf of FMC, and Chris Pezek represented the landlord. 39 Eisenhower Drive. This is the building you may remember that Summit Tire moved out of. 30,000 square feet they vacated, which is a big chunk of space. However, before they had even moved out, Independent Delivery Service was teed up to take their space and backfill it, as well as Bisson Moving. So there was virtually no downtime, no vacancy. Tony McDonald brokered those deals. And similar story here, 84 and 86 Industrial Park Road. We lost two tenants in this building over the summer. Curran Food Company bought a building in Biddeford, and Better Bread moved to Falmouth, leaving 25,000 feet, but before they even moved out, we had negotiated with an existing tenant, Cape Seafood, to absorb that space. So again, virtually no vacancy. Talk about some current conditions. I'll give you some stats. Here's the numbers. You can see clearly that absurdly low 3.38% vacancy rate. And that's the number that's driving everything I'm talking to you about today. It really quantifies and explains everything that we feel on a day-to-day basis. Vacancy rates by city and town, you can see that it's not really exclusive to one town or area. It really is across the board. Portland in particular did quite well. They're down 100 basis points to under 4% vacancy, and that's a huge industrial market. In this slide, I know it's kind of hard to read, but let me just sum up the takeaway here. It's tight inventory across even historically challenging stretches. Think about areas like Brasumscott Street and Warren Avenue, Pleasant Hill, areas that we typically may see some older buildings sitting there empty, virtually all full. And I will take a minute and talk about lease rates. I've given you a lot of information and explained that demand is very high, supply is very low, and landlords ask me why is the lease rates still sort of just chugging along at $5.50 a foot. And I've sat on this stage in the past and I've hypothesized, we have a very conservative landlord base. I think they're kind of happy to keep their tenants at fair market pricing, and you have to keep in mind that this sector, maybe more than any in the recession, felt a lot of pain. So I think landlords and brokers probably have long memories. Now that all said, that's about to change. We've got new owners and we've got new speculative buyers, and these folks are going to want to drive prices up. And that, combined with several years of good and positive news here, I think the people in this room, we can safely advise our clients that now is the time to increase lease rates, and to that end, I am going to predict a rather sharp increase in asking lease rates into 2016. This market trajectory slide, again, a lot going on there, but it does show clearly that lease rate, 547 in 2011, and it's only up to 562 this year. So something is poised to change. The other thing that this slide shows is really all the economic indicators that we've been tracking show an improved and very competitive market. It, again, quantifies everything that we're feeling. I always like to give you some context on, sorry, I'm going backwards. There we go, on what's happening in the nation, and see how we compare. Continue to compare pretty favorably. One thing to note here, you can see that the rest of the country is not feeling nearly the space crunch that we are. The answer and the reason for that is quite simple. They are building. They are adding inventory, and we are not yet. So let's see how I did last year. Pretty well. I said that it would be a landlord's market. I said that the investment market would continue to thrive, clearly has. Land interest would continue and increase. Secondary markets, places like Lewiston, Auburn, the Mid-Coast, Biddeford, Saco, I think are all really capitalizing on Portland's full market. Tenant shuffle would continue. That's when we take a business from building A, move them into building B, leaving building A empty. And it really just kind of outlines the lack of out-of-state businesses coming in and absorbing. We're just moving Maine-based businesses around. I did say that planning time for real estate decisions would increase, and that was true in the case of HSA Gould and SEVA, some of these companies that had very specific requirements. What I didn't consider are the deals that were presented as opportunities to prospective buyers or tenants, and given the amount of competition, they had to act fast. Sidco was an example of that. They had to act aggressively. So real estate decision-making had some pressure on it, just given how competitive things got. And I was dead wrong about vacancy rates. I did say that they would increase last year. They went down again. We'll see what I predict this year. You'll see. Now I'll get into the forecast. I always like to talk about significant vacancies. Again, in the interest of time, I won't go into too much detail here. I will say that when I made this slide in December, all these spaces were available today, 2 or 3 weeks later. 2 of them are not. One Baker's Way is off the market. It was fully leased to FedEx last week. So that's a 260,000-foot space filled, which is great news. Tony McDonald did that deal. 413 Warren Avenue, that's where Safelite ended up, so that's off the market. And 235 Persumscott, as I mentioned, is largely under contract. Grand plans there to improve that building, so I think that's going to go rather quickly too. Very fast-moving market. My slides can't even keep up. Here's some predictions. I do think that we'll see more speculative building. I think folks are starting to listen to my report and realize that there's an opportunity there. So inventory will increase the vacancy rate. I think finally we'll be successful in recruiting an out-of-state business. Maybe it's wishful thinking, but I think the national scenery in the industrial market is quite healthy, and Maine could be poised to capitalize. And to that end, I think that a new building will have to be, if not planned, if not constructed, at least started to get planned. We just don't have the inventory to support a large out-of-state industrial user, at least in Greater Portland. Utilities are really important in the industrial market. They're an important factor in decision making. Natural gas being one of the most important. We've had this conversation with the town officials in Saco. They're very supportive. They understand that natural gas in that park would be a huge boon. And we've had prospects and tenants and buyers tell us specifically we can't go there unless it has natural gas. So I think that this will be the year that that gets done. This quasi-retail warehouse competition, if you want to call it that. I mentioned my experience at Bayside with American Roots. I also represented Bissell Brothers Brewing. They're moving to Thompson's Point. They made a conscious decision that they don't belong in the back of an industrial park at $5 or $6 a foot. They're willing to spend more to get that added visibility. And as long as some of these companies are willing and able to pay more, I'm predicting that some of the high traffic, more visible industrial stretches like a Bayside, even Warren Avenue, even parts of Persumscott Street, I think, will start to see rents match suburban retail pricing. I do think that the stars have aligned. We will see a big jump in lease rates this year to $6 a foot. That would be about a 5.5% or 10% increase. Brokers and landlords, property owners, you're all listening. And be ready for the new norm in the industrial market to be $6 a square foot triple net. Marijuana is not going anywhere. Landlords are becoming more comfortable with the use. As I said, the tenants are becoming more business savvy, more commercially viable. And very importantly, it seems that the laws are softening in their favor. So more and more, I think our state is just going to embrace this industry, and it will continue to go mainstream. I don't see any reason that the nation is going to slow down either. Manufacturing is up. If you think about the way we shop nowadays, it's Amazon and eBay. So we need places to make that stuff, we need places to store that stuff, and we need places to distribute it to our front door. So I'm very bullish on the industrial market long term. And last year, as you recall, I did make one final prediction. I picked the Patriots to win the Super Bowl. I'm sticking with that trend, 31-17. Thank you, everyone.